Welcome back to Dollars and Cents. I am your host, Joel Garris of Nelson Financial Planning. This segment of the program, we're going to talk about some commonalities for successful investors. On the program, we certainly covered the topics of the week, including the extension of the tax filing deadline to May 17th due to a whole lot of changes that the IRS is not anywhere near close to being able to implement in a timely manner. We also talked about the big news out of the Federal Reserve, along with a occurrence in the market, a 1,000-point gain in 5 days, the fastest period of time in which the market has done that. Of course, 1,000 points doesn't mean what it used to be in the markets, because obviously the number is much, much more. So today, 1,000 points means about 3%, whereby 20 years ago it meant like 10%. So understand how those larger numbers work from a percentage change, but certainly a move that caught everybody's attention, and a move that really underscores the notion of don't fight the Fed. If you're an investor, it's hard to fight the Fed when they want to keep interest rates low, particularly when they want to keep interest rates low or basically at zero until the year 2023, and ultimately wind up also doing bond purchasing to the tune of $120 billion per month. Big dollars there that really do serve to push interest rates higher. Market's not quite buying that, because we saw mortgage rates on 30-year fixed rate mortgages jump above 3% for the first time since last July. So definitely a little bit of an uptick in interest rates and mortgage rates in particular, as a result of what's going on in the bond market. So certainly some notable news over the course of the past week. And so if you missed any of that, again, we invite you to seek out our podcast or our YouTube channel. Make sure you subscribe to us on your favorite social media podcast channels of choice. To find us, just search for Nelson Financial Planning or Dollars and Cents with Joel Garris, and you can get connected to us there. If you have problems finding us, go to our website, nelsonfinancialplanning.com. Upper right-hand corner, you'll see a bunch of icons. Those will connect you right directly to it. So what are some of the commonalities for successful investors? There's been a lot of studies on this, and a lot of these studies have concluded that there's sort of 5 key things that successful investors sort of all have in common, if you will. And first and foremost is probably saving more is the most efficient way to grow wealth, right? I mean, that's simple stuff. If you're saving more, then you're ultimately going to be accumulating wealth more over time. And so it really comes back to, okay, how much money's coming in versus what are the expenses that are going out, making sure that that difference is getting saved. As we talked a few weeks ago on the program, we talked about paying yourself first. Far too many people sit around and say, oh, I don't have any money left over. Well, the concept is, if you're saving for your future, you don't leave that to the last thing that you pay each and every month. You make that the first thing that you pay each and every month. Much like you have your bills, okay? You don't want to be investing after you've paid all your bills. You want to be investing, paying yourself, if you will, first, and then figure out a way to make sure that everything else is getting paid. If you do that, that will certainly be a pretty successful strategy that will allow you to save more, which is, of course, the most efficient way to grow wealth. Number 2, and this is hard because we're all human beings and we're inundated with information 24/7 these days, and that is just simply this. Don't worry, as the old Bobby McFerrin song would go, don't worry, be happy. Avoid worrying. Avoid worrying about whether there's a bubble happening or there's a crash happening or what's going to happen next week, next month, next quarter, next year. Studies show that even if you invest at the market peaks each and every year, you still wind up with great long-term results. So really try and ignore all of that noise out there, because that noise will only serve to distract you. So, of course, number 2 on that list of commonalities for successful investors, avoid worrying. Remember Bobby McFerrin, don't worry, be happy. Number 3, start early, because when you start early, this is where the magic or the power of compounding comes into play. We've talked about this certainly on prior programs in the past. I mean, shoot, program's been on the air for 35 years, so there's like 1,500 episodes. We've talked pretty much about most of this stuff already, but it kind of bears repeating because there's a lot of commonalities to successful investing that are true back in the late 80s, mid 80s when the program started, or today in the year 2021. The power of compounding and the compound investing works like this. You put in $10. It grows by 10% in year one. That means you've got $11. So if it grows again by 10%, it's not, you don't make a profit of just $1, you make a profit of $1.10 on that. So that compounding effect over an extended period of time leads to a much greater, more sizable amount of wealth down the road. So the earlier you start on that, the greater the power of compounding. That's the notion, the analysis of if you start 10 years early versus the guy who waits 10 years, you wind up with a lot more money over a period of time. Number 4 is keep positive in terms of the future, right? World's not going to end. And if it does, then whatever your financial plan is, it doesn't matter, right? The reality is there is an investment strategy when the world ends. So understand that that positive outlook makes a big difference, and most importantly, helps you stay the course as an investor. The reality is, over the course of the past 100 years, the markets have certainly seen ups, downs, world wars, recessions, presidential assassinations, everything in between, and yet the trajectory has continued to move upward. And when you stop and think about that, you have to understand that the market itself represents the value of companies, and these companies are producing stuff that you and I and the rest of the world uses every single day of our lives. And that's really what it's all about. And so as the expansion of those products and services and goods continues throughout the world, then ultimately that's why you see market valuations continue to also expand over time, over the course of history. So make sure you kind of maintain that positive outlook on what the future is going to hold. And then, and I guess this goes hand in hand with sort of maintaining that positive outlook, is one's temperament. And again, we're talking about the commonalities of successful investors, right? The temperament that you have is probably the greatest factor in your return. Your temperament allows you to see that bigger picture and not lose sight for what's happening this week, this month, or this quarter. So understand those commonalities for successful investors. Make sure that you're applying them in your daily life. Saving more is most important. Avoid worrying whether there's a bubble or a crash coming up next. Who knows? The reality is we will get through it. Start early to really appreciate the magic of compound investing. Keep a positive outlook on the future, and then make sure that your temperament doesn't cause you to get distracted along the way. So some interesting commonalities of successful investors. With that, we'll wrap it on up and get on out of here. Thanks for listening to this week's program. This has been Dollars and Cents with your host, Joel Garris of Nelson Financial Planning on News Radio WFLA Orlando, along with 96.9 The Game.